Hello, I'm Jerry Lotz, and welcome to episode 7, where I'll share a little bit about who I am, what I do, and certainly invite you to do the same, as I'm sure there are opportunities for us to help each other. At the end of my last episode, I promised I'd share some more details about the pre analysis reports that we generate. So, the pre analysis report usually takes the format of about an 8-page document. First few pages or so give an overview of exactly what is cost segregation and the benefits therein. The next few pages talk specific to the property that we're analyzing, estimates of tax savings, and it also gives our costs to do the work. The final pages is the actual engagement letter that the client would sign off on for us to complete the work. Over CSSI's 18 years or so of being in this business, they've completed well over 20,000 studies in every state in the country. In that realm, they probably complete 4,000 or more pre analysis reports every year. So they actually basically created their own custom software to help in the facilitation of these reports. When we get requests for pre analysis reports, it's really two types of requests that we're getting. We're getting requests for properties that are either newly bought, newly built, a new transfer of ownership, or we're getting requests for properties that have been owned for a number of years. For properties that are new transfers of ownership, although the more information we have ahead of time, the better, we can really prepare the estimates based on just 4 pieces of information. One is the building cost, not for the land, just for the building. Then we need to know the building type, whether it's a self-storage or a multifamily or a 10,000 square foot office space, whatever information there. And then some type of identifying information about the property. Maybe it's the property owner's name, a street address, or however else it is that they would like for us to identify that. For properties that have been owned for a number of years, having those same 4 pieces of information is great. We can prepare a report with just that. But if we had a depreciation schedule, it really lets us get a little bit more detailed and fine-tune those estimates a little bit more. With the depreciation schedule, our team would do something called a scrubbing process. By that, I mean they look meticulously at that schedule for a number of different provisions. They would look at assets that have already been put into accelerated depreciation categories. They would look at assets that are not in the accelerated depreciation category. They would also look at something called CapEx reversal opportunities. Now, by that, I mean entries that were made 6-7 years ago and correctly capitalized. Some of those now, according to tax law changes, may be able to be reversed and expensed. So that would pick up some considerable additional depreciation. There are also a few more other pieces that they look at, but without getting too far into the weeds, I'd just like to say that whether a property is newly bought, newly built, even if it's been owned for a number of years, there's a darn good chance that we can go and find some tax savings. The next episode, I'll talk just a little more about the pre-analysis and then focus more on the engagement process. Thank you for watching. I'd like to invite you to share some details about yourself, as I'm sure there are opportunities for us to help each other. In closing, I'd just like to say happy Passover, happy Easter. Be safe, be well. Blessings till we meet again.